Good morning, everyone. Good morning. Good morning to all of you. How are you all? So, first, let me know is audio and video both are okay? Is audio and video both are okay? Yes, Gaurav sir, this is English medium PPB batch. Okay, both are okay. Are we good to go? Let me know. Is everyone is here? Done. So this is our first class for the principles and practices of banking crash course. So this is our first class in which we will be talking about the PPB's crash course. So before starting the class or before starting the content or the syllabus, first of all, if we talk about the PPB subject have 45 units. Okay, how many units are there in the subject? 55 units are there. So you will find in the principles, practices of banking, we have 55 units in this subject. This is a lengthiest subject of JIB, in which if we go with the module A, we find from unit number 1 to unit number 21. This is the 21 units you will find in the module A. Okay, 21 units are there in the module A. If I talk about the module B have 22 to 41 units. So you can see the module A and B covers the huge part of our syllabus, right? Total 41 units are there in the module A and B out of 55, right? Then if I talk about module C talks about from 42 to your 50 units. Okay, so there are 8 units, and if I talk about module D, that is having 51 to 55 units. So module C and D is comparatively small, but when it comes to the module A and B, that's a very huge modules and cover 41 units. And module C, when we talk about with the unit names, like how many units are there, we see there are only 8 units, but it's a very lengthy module. Okay, module C is very lengthy. In module C, we talk about the banking technology, and the banking technology unit is a very lengthy unit. Sorry, very lengthy module. Every chapter of module C is very lengthy. Okay, so this is what the syllabus of PPB is. Now, in crash course, we will be trying to cover all these units, important, or I can say the concepts of a particular batch. Okay. Apart from this classes, apart from the paid classes, what next you have to go with? You have to go with the mini marathons. Okay, you have to go with the mini marathons. You have to go with Maha Marathon. Then Maha revision session. Okay, apart from that, Chalisa session. All of these you have to go through. Okay, all of these you have to go through, and these all will be available on YouTube. So all the 4 modules mini marathon will be there, and all the Maha marathon, Maha revision, all of these will be there. So yesterday we have done the module A's mini marathon. If you haven't seen that, go and check that out on the YouTube. It is available. Apart from that, you also have to go with the revision batch, because in revision batch we will be doing the practice of whole syllabus. So this revision batch will start around on 1st May in the evening, or we can say on 2nd of May. Any one of these day we will be starting our revision batch. Okay, sorry, not the 1st but the 4th May. 1 second, let me. Because we have our IEIFS paper on 4th May, so we will be starting on the evening of 4th, or we will be starting in the morning of 5th. Any one of these days will be there. So this is how we will be going to cover the PPB subject. Okay, so do make sure you join these classes so that we will be able to clear the subject. Now PPB, when we read, it feels like it's an easy subject because we are aware about the content. We know what is the principles and practices of banking because this is what we are working on. Hana, in a bank right now, when you are working in a bank, you are doing a practical banking, and all of these you have already studied or already heard somewhere. So that's why we feels like this is a very easy subject, but it's not. It's a tough subject, comparative. When we talk about like questions, like when we talk about the questions they ask in the PPB, that's tough. Okay, so accordingly we have to prepare. So let's start. Introduction. If we talk about, so today we will be talking about the chapter first. So you can see banker customer relationship is a very important chapter. A lot of banker customer relationships are there that might be asked. Okay. Also in the sessions and the crash course batch, we will be covering the content first by discussing that in the class, and second we will be covering the content at the same time with the PDF also. Okay, a certain part of syllabus I will be uploading in the PDF so that you can read it by yourself as well, and we will be able to cover maximum content. Okay, done. So let's start the banker customer relationship. So when we talk about banker customer relationship, the basic function of a banker is simply accepting the money from public, okay, by way of deposit, and deploying the same by the means of loan and investment. So this is what business of banking is actually, in which it have been said that you are allowed to accept money from public, which only have to be used for lending or investment purposes. Besides, banker render a variety of services like providing lockers, keeping articles in safe custody, collecting bills and checks, etc. Okay, so all these kind of activities are performed by the bank for the customer. Then next we have different types of relationship are created between the banker and the customer depending upon the nature of services rendered. Like what kind of services bank is providing to the customer, on the basis of that the banker customer relationship will be created. Okay, on the basis of what kind of services the bank is providing to the customer, on that it depends what kind of services. Hannah, on the basis of the services we will be talking about that what type of banker customer relationship they will be performing. Clear now? So next we have requirement to be called a bank. If any institute wants to be called as a bank, they have to go with the certain terms and conditions or the functions. So Section 5B of Banking Regulation Act 1949 tells us that the term banking means accepting for the purpose of lending or investment deposit of money from public. So we are accepting deposit of money from public for the purpose of lending or investment, which will be repayable on demand or otherwise and withdrawable by check, draft or otherwise. So this is the what banking actually means. If any entity, if any institution is performing all these four activities, like if any company is accepting deposit from customer, deposit from public for the purpose of lending or investment, which will be repayable on demand or otherwise, and which will be, we can say, Hana, we can say which may be repayable on demand and otherwise, and also withdrawable by check, draft order or otherwise. If any company, any entity is performing these four tasks, then it will be called as a bank. Okay, in that case, it will be called as a bank. Right, that is defined under Section 5B of Banking Regulation Act. Now, so the banker is in the business of accepting deposit from the public and utilizing these for the purpose of lending or investment as well. Hana, so what we are saying that the banker is in the business of accepting the deposit from whom? From the public, and also utilizing these for the purpose of lending or investment as well. Now, so thus essentials to satisfy the requirement of the definition are: first is Deposit should be only for lending and investment. Whatever deposit you are accepting from the public, it can only be used for the purpose of lending or investment. Companies who are accepting deposit for the trading or manufacturing, they are not considered as a bank. Okay, let's say any company is accepting a deposit from their public in form of shares, bonds, and debenture, and they are using that money to develop their business and expand their business, that won't be counted as a banking. Okay, then the deposit should be from the public. So if nidhi companies, cooperative societies, if they accept deposit from their member, they are not covered as a bank. Okay, so the deposit have to be accepted from the public only, then it will be called as a banking institution or a bank. If the deposit have been accepted by the members of their own company, then it won't be taken care as a bank, right? Then the third one is acceptance of deposit should be in the form of money. The deposit that we are taking from a public should have to be in the form of money. If these three cases have been fulfilled, that is defined as a bank. Okay, that company will be defined as a bank. Now, a company incorporated under Indian Companies Act 1956 or Companies Act 2013 can be a bank, a banker, or a banking company. But when under Section 5C of BR Act, it has been said that banking company means any company that transact the business of banking in India. Okay, what is banking company? In the Section 5C, it have been said that banking company means simply any company which transact the business of banking in India. Okay, and what is the business of banking? That is defined under Section 5B. So if any company accept deposit from public, okay, and use that deposit for the lending or investment purpose, and the next thing is if they are doing, next thing is if they are doing any kind of repayable of money on demand or otherwise and withdrawable by money by check, draft, and etc., then they will be called as a banking company. Okay. Then Section 7(1) says that the BR Act prohibits the use of word banker, banking, or banking company by a company other than a banking company. So only a banking company can use in their name the words banker, banking, or banking company. Okay, no other company can use this word. And Section 7(2) says that that it prohibits the use of such words by an individual or a group of individual or a firm. So no company, no group of individual, no individual or a firm can use the terms bank, banking, or banking company. These terms will be only utilized by those companies who perform the business of banking. And the business of banking is simply accepting deposit from public for the purpose of lending or investment, repayable on demand or otherwise, and withdrawable by check, draft, order, or otherwise. Okay, so do remember all the sections here: Section 5B, Section 5C, Section 7(1), Section 7(2). All the sections you have to remember. Now, also it has been said that money lenders are not bankers. They are the part of informal financial system. Right? They are what? They are the part of informal financial system. So they are not bank. Accepting deposit of money from the public. Second, we have what? Accepting the deposit of money from the public. Third, acceptance for the purpose of lending or investment. So first, money lenders are not bank, and if you are accepting deposit of money from public, acceptance for the purpose of lending or investment, deposit repayable to depositors on demand or otherwise, these are the conditions that have to be followed by a banking company. So if any company wants to be called as a banking company, they have to fulfill all of these activities. Clear? They have to do what? They have to fulfill all of these categories. Okay, next. So banks are also authorized to carry out the certain other transaction. It's not like bank only perform the four function: accepting deposit, providing loan or investment, repaying the money, and withdrawing the deposit. These are not the only four things the bank is doing. Bank perform more services. So the other transactions or other services that bank can provide is defined under Section 6 of Banking Regulation Act. which are bank can do the discounting of bills, bank can perform collection of checks and bills, bank can do the remittances, bank can accept the safe custody of articles, bank can give the hiring safe custody lockers to the customer of its, bank can conduct foreign exchange transaction, bank can conduct the government transactions which is related to central government or state government. Also bank can issue letter of credit and guarantee. And apart from those, bank can also perform wealth management services. Bank can do the project appraisal also. Bank can be doing selling of third party product as a mutual fund, life insurance, general insurance. Bank can act as an executor trustee services. Bank can do the acceptance of central and state government taxes. Also, franking of stamp duty on documents can be done by bank. Securities trading can be done by bank. Factoring can be done by bank. Venture capital financing can be done by bank, and demat services can also be provided by the bank. So you can see all of these are the services which is also a bank is providing. So apart from the business of banking, what other the bank can do is defined under the section 6 of Banking Regulation Act. So section 6 of Banking Regulation Act says that bank can perform all of these activities, bank can perform all of these services. Okay. Now, next we have who is a customer. So before we understand the banker customer relationship, it is necessary to know who is called as a customer of a bank. So simply the term customer of a bank is not defined by law. So a person who has an account in bank is considered as a customer. So the legal judgment in the past, however, used to qualify this statement by laying emphasis on the period for which an account had actually been maintained with the bank. So earlier it used to be taken like for how much duration the customer have maintained the account of a account with the bank, that used to define that the person is a customer of a bank or not. But now we can simply say if any person is holding account with the bank, that person is a customer of a bank. Okay, but for KYC purposes, the definition of customer have been given, in which it says that a person or entity who maintains the account. Okay, let's say if I am maintaining account, if any other company is maintaining account or has business relationship with the bank, or they conduct a transaction with the bank, okay, they are called as a customer. So any person or entity who maintains the account or has a business relationship with the bank or conducts a transaction with the bank, they will be called as a customer of a bank. Also, it has been said that one on whose behalf account is maintained or transaction is conducted is known as your customer. Okay, so beneficial owner are what? So section 2FA talks about the beneficial owner. Beneficial owner means simply any individual person who ultimately owns or control a client of a reporting entity, or the person on whose behalf a transaction is being conducted, and includes a person who exercises ultimate effective control over a judicial person. So what we are saying, simply the beneficial owner we are talking about. So let's say, for example, Mr. A is the customer of a Punjab National Bank, for example. Now, Mr. A actually did what? He hired another person to perform the banking transaction on his behalf. Okay, so he hired, let's say, chartered accountant or some other person to maintain his account. So now that chartered accountant or the another person will be called as a beneficial owner. So this beneficial owner will be doing what? Will be performing the transactions or will be taking care of the account transactions of Mr. A, because Mr. A have given this right to him. Because Mr. A have given this right to him. So he will be maintaining the account. Clear? Next, we have, apart from this, they also perform the transaction on behalf of their client. Like beneficial owner will perform the transaction on behalf of Mr. A. So that beneficial owner will also be called as a customer of a bank. Okay, that will be also called as a customer of a bank. So you can see the beneficiaries of transaction conducted by professional intermediaries Like a stockbroker, the chartered accountant, the solicitors, they are permitted under the law. So they can do what? They can transact, they can perform the transactions on the customer's account by being a professional intermediaries of a customer. Okay, so they all are allowed under the law. This is a PPB crash course. This class is a PPB English medium crash course. Okay, now. So any person or entity connected with a financial transaction which can pose significant reputational or other risk to the bank, say a wire transfer or issue of a high value demand draft as a single transaction. So we are saying simply any person or any entity which is connected with the financial transaction, which can pose the significant reputational or other risk to the bank. They say a wire transfer or the issue of high value demand draft as a single transaction will be done. Clear? So any person who is performing transaction with the bank or any person who is performing transaction with the bank on behalf of someone else, as their professional intermediary, they will be taken care or they will be called as a customer of a bank. Right now, you can see as per the Prevention of Money Laundering Act 2022. Okay, that's the update. The client definition have been said. So it says that the client means a person who is engaged in the financial transaction or the activity with the reporting entity and includes a person on whose behalf the person who is engaged in the transaction or activity is acting. So as per Prevention of Money Laundering Act 2022, the client definition says that simply a person who is engaged in a financial transaction, a person who is engaged in a financial transaction or equity with a reporting entity. Okay, with whom? With the reporting. So simply any person who is engaged in the financial transaction with the reporting entity. Reporting entity means the banks. Okay, and they include a person on whose behalf the person who is engaged in transaction or activities acting. Okay, so if anyone else is performing the transaction on behalf of the account holder, that person will be also included. So first, any person who have account and performing financial transaction or activities with the bank is the client of a bank. And if any other person who have been hired to be performing on behalf of the account holder to perform the transactions or activities in the bank account, that person will also be called as a client. Okay, so a customer of bank need not necessarily be natural person. It's not mandatory that a human being will be the only only be the customer of a bank. No such kind of situation is there. Like you can't say that when we talk about the human beings, they are the only eligible customers of a bank. No, that's not true. Okay, it can be a firm, a joint stock company, a society, or any separate legal entity. Okay, they also called as a customer of a bank. Right? They also called as what? They also called as a customer of a bank. So it's not mandatory that all the natural persons are only allowed to called as a customer of a bank. Any person, any entity, any firm is allowed to be called as a customer of a bank. And you can see the section 45Z of Bombay Banking Regulation Act 1949. It clarifies that the customer includes a government department also, a corporation also, which is incorporated by or under any law. So any person, any natural person, any firm, any company, any department, any corporation, any society, any legal entity, they all can be a customer of a bank. Right? They all can be what? They all can be the customer of a bank. Now we are starting our first banker customer relationship. So banker customer relationship is actually dependent on the basis of what services the customer is taking from a bank. Okay, so what services a customer is taking from a bank, on the basis of that we defines the banker customer relationship. Okay, we define the banker-customer relationship. So you can see the first we have debtor-creditor relationship in which bank is a debtor and customer is a creditor. Okay, so it happens when customer opens a bank account. So when a customer deposits money with his bank, the customer becomes a lender and the bank becomes a borrower. So what happened? Customer opens bank account. Okay, customer is opening a bank account with a particular bank. So in that case, customer will be giving deposit to bank, and that's why customer called as a lender and the bank called as a borrower. Because in the deposit accounts, in maintaining the account with the bank, customer gives money to the bank. Okay, so when a customer deposits money with his bank, the customer becomes a lender and the bank becomes a borrower. So the money will be handed over to the bank is a debt, and the relationship between the banker and the customer is that of a debtor and creditor. See, okay, so in case of opening an account in a bank, it creates a debtor creditor relationship between a bank and a customer. Done. Next. So you can see there are main feature of this relationship between a bank and customer. First, the bank is free to use the deposit amount in the way which is most beneficial for a bank. So if I have deposited 1 lakh rupee in my bank, so my bank is allowed to use or to invest that 1 lakh rupee in whatever field bank feels that the maximum return will be covered. Okay, like maximum benefit he will cover, bank will cover. In that case, in that market, they can invest the money. Also, the next says the customer should make a demand of payment. The banker is not required to pay voluntarily. Okay, so what we are saying, the customer should make a demand of payment. Banker is not required to pay voluntarily. It's not like the banker will come to your doorstep and will say that this is the financial year closing. You might be needing the money, so we are here to provide you the withdrawal. No, until and unless you ask for a withdrawal, you can't get a withdrawal. Hana? So you have to demand for the payment. You have to demand for the withdrawal. It's not a voluntary service that bank will go to the home of every customer and provide them the withdrawal. No. Next, we have the demand should be made in a specified manner. If you are demanding to withdraw the money, you have to do in the right manner. By check, by draft, by withdrawal form, by order or otherwise, during a working hours of a bank, you can demand for your money. Okay, you can do what? You can demand for your money. So the creditor customer does not have any security from the debtor, that's a bank. So when we deposit our money with the bank do not provide us any collateral or any security on that. So the creditor means the customer when opening a bank account in a bank, giving a deposit to a bank, is not having any security from the debtor, that is called as a bank. Okay, so the law of limitation does not begin to run until a demand has been made for the repayment in case of both demand and fixed deposit. So simply we are saying the law of limitation does not begin to run. Okay, law of limitation does not begin to run until a demand has been made for repayment. In case of your demand deposit and fixed deposit both. Okay, so the demand for the repayment have to be made by the customer. Now the second banker customer relationship will have is a creditor and debtor relationship. And the name suggests bank is a creditor and customer is a debtor. And this relationship will be created once the bank is providing loan to a customer. When the bank provides loan to a customer, in that case, because bank is giving money, bank will become the creditor and the customer will become the borrower who is taking a loan from the bank, who is taking a money from the bank. So when the bank lends money to the customer is the borrower and the bank is the lender. And lending money is the most important activity of a bank because by providing loan, the banks earn a revenue. So the resource mobilized by banks are utilized for lending operation. है ना, like whatever deposit banks is taking from a customer that will be used for the lending operations. So customer who borrows money from the bank, they owns the money to the bank. So in the case of any loan or advance account, the banker is creditor and the customer is the debtor or the borrower. Okay, so the borrower executes document and offer the security to the bank before utilizing the credit facility. So in addition to these two activities, bank also undertake other activities which is mentioned in section 6 of the Banking Regulation Act. So under the Banking Regulation Act, we also have what? We also have the other activities that the bank can perform is defined. So depending upon the type of services rendered and the nature of transaction, the banker acts as a belly, banker acts as a trustee, as a principal, as an agent, or as a lessor and custodian also. So apart from opening a bank account and apart from giving a loan to the customer, bank also perform other kinds of services. Okay, and in those other kinds of transaction that bank is performing with the customer, they act as a belly, trustee, principal, agent, lessor, custodian, etc. Clear to all? Let me know the creditor debtor relationship and a debtor creditor relationship both are clear to all of you. Okay. Now the next relationship we have of a banker customer that talks about banks as a trustee. So a trustee is simply any person or a firm which holds and administers the property or the assets for the benefit of a third party. Okay, let's say I have given a certain valuable documents of mine or any property of mine to the bank to hold it, okay, on my behalf. So that is known as a trustee because I trust the bank. That's why I have given that documents or that valuable thing to the bank. If I won't be trusting the bank, I won't be giving my assets to the bank. So when a customer trusts on a bank and bank acts as a trustee, Hana, and holds and administer the property or the assets of the customer or for the benefit of the third party is called as a trustee function of a bank. It is called as what? It is called as a trustee function of a bank. So you can see the trustee are required to make decisions in the beneficiary's best interest and have a fiduciary responsibility to them, meaning they act in the best interest of the beneficiaries to manage asset. Okay, so whatever is in my best interest to manage that asset, bank will be performing that only. So if a customer keeps certain valuables or security with the bank for safekeeping or deposit a certain amount of money for a specific purpose, the banker, besides becoming a belly, also becomes a trustee. So let's say customer came to the bank and given a certain valuables or security to the bank to have in a safekeeping or deposit a certain amount of money in a specific purpose with the bank. In that case, bank becomes a belly, but also bank becomes a trustee. Okay, so when a customer is giving certain assets or valuable to the bank to hold in the safekeeping, that will create a belly relationship, and that's also creates a trustee relationship. Then fourth, we have belly beller relationship, whereas a bank is a belly and a customer is a beller. So what happened when customer deposits certain valuable bonds, securities, and other document with the bank for their safe custody? The bank, besides becoming a trustee, as discussed earlier, also becomes a belly, and the customer becomes the beller. So in any case, if customer is giving anything to the bank, है ना, so they will be called as what? They will be called as a trustee. And the second thing is there, but if the customer tells, but if the customer tells to the bank that this is why I am providing this security and this is the security I am providing to you. Okay, if it happens, In that case, bank will be called as a belly when it have been specified. Okay, the purpose of holding that security and also what actually the security is. If that have been told to the bank, in that case it's a belly, otherwise in general cases it's a trustee. So according to the term section 148 of the Indian Contract Act, the bank becomes custodian of the securities of customer, and hence as belly is liable for any loss caused to the beller due to its negligence. Okay, so we are saying simply, according to the term of section 148, the Indian Contract Act acts that the bank become custodian of the security of the customer. Okay, so hence as a belly, bank is liable for any loss which happens to the belly due to the negligence of a bank. If due to the negligence of a bank, the document or valuable of a customer have actually misplaced or something happened, in that case bank is liable to that loss. Okay, in that case what happened, bank is liable to that cause. Next we have the finder of lost goods. Section 71 Indian Contract Act should return any increase in goods and animals to the true owner. Okay, in case of finder of lost goods, Section 71 of Indian Contract Act says that bank, whatever thing have been finded by the bank, that have to be returned to the customer, to the true owner. Now, under Section 164 of Indian Contract Act, it have been said that finder has to take care of such goods as an ordinary prudent man. And these are the examples of belly and beller also. Okay, so like in case of somebody has left something in your branch and you find out that this is the thing or this is the product of that XYZ person. In that case, you have to take care of such goods as an ordinary prudent man. And a bank have to take care of that particular goods of a customer. And that creates the example of beller and belly relationship. Okay, next. Next, we have a agent principal relationship. In the agent principal relationship, bank is an agent and the customer is the principal. Right? In the agent principal relationship, bank is the agent and customer is the principal. So here the bank get standing instructions from the customer and bank perform those instructions. That's why bank is called as the agent and the customer is called as a principal. So according to section 182 of Indian Contract Act 1872, a principal is the person who delegates the authority to another person. Okay, a principal is what? A principal is simply a person who delegates the authority to another person, namely the agent. So when the customer delegates the authority to the bank, it's called the agent principal relationship. So you can see among the ancillary services rendered by bank are remittance, collection of check, bills to pay regularly, electricity bill, telephone bills, insurance premium, club fee, etc. So these are the another activities that the bank perform. And on behalf of the customer, in these cases, the bank acts as an agent with his customer being his principal. Okay, so if let's say I have told my bank that you have to pay the insurance premium of my LIC policy on every first of the month. So bank is performing that payment on behalf of me on every month. So that's your agent principal relationship. If bank, I have given a check to the bank and bank is performing the clearance of check on my behalf, that is called as your agent principal relationship. If bank is paying my bill or bank is performing remittance because on my behalf, in that case also bank will be taken as a agent principal relationship. So simply bank act as an agent for the customer because it performs the transactions on the order of a customer. So the relationship of agency terminates on death, insolvency, lunacy of the customer. If the customer death happened, customer became insolvent, or customer is having any mental issue, है ना? In that case, the relationship of agency or the agent customer relationship will be ended. Okay, next we have a lesser lessee relationship. Next type of relationship we have a lesser lessee relationship, in which bank is a lessor and the customer is a lessee. Lesser means the owner. So bank is the owner and lessee means the tenant. It means lessee is the tenant here. So whenever a customer takes a locker facility from a bank, okay, whenever a customer takes a locker facility from a bank, what customer do? It can deposit its valuables in the locker. It might be any jewelry, it might be any piece of paper, it might be a cash or something, it might be a property paper. Okay. So section 105 says simply that the Transfer of Property Act deals with the lease, lessor and lessee. So lessor is OR. Okay. So the banks provide safe deposit locker to the customer for the use on the lease basis. It means on the rent basis. So the relationship here is that of a lessor and lessee, or of a licensor or licensee. Okay, so simply the customer have taken a locker from a bank. So customer is hiring a certain place within a bank premises, okay, to put his valuables. So bank have provided the customer a certain part of their premises in which the customer can maintain their valuables. So because you are using a property of a bank, right, you are using a certain part of the property of a bank in which you are putting your own documents, your own valuables. So it means you are renting it out, you are renting the bank's property or bank's premises to secure your products or documents or something. Okay, in that case, simply you have to pay a rent to the bank. That is the lease payment. So the bank should not be liable for any damage and or loss of content of locker arising from the natural calamities, like because of the act of God, like earthquake, floods, lightning, thunderstorm, because of any issue of these. If the locker destroyed of a customer and the customer's whatever property was deposited in a bank that have been actually destroyed, in that case bank is not liable to pay that amount of money to the customer. So bank also or any act that is attributed to the sole fault or negligence of the customer. Hana, like customer have performed the negligence or customer's sole fault it is, then the bank is not eligible or bank is not liable to pay the compensation or to recover the damage for a customer. So bank shall exercise the appropriate care for protection of their locker system and premises. Okay, when the bank is providing these locker facility to the customer, they have to take care of the protection of locker and premises. Okay, the next we have a indemnified relationship, where bank is indemnified or indemnity holder and customer is a indemnifier. Okay, so whenever a customer actually lost their demand draft or fixed deposit receipt or something, in that case customer can go to the bank and ask for a duplicate document. Okay, and when bank is issuing a duplicate document, bank asks the customer to sign the indemnity bond. Okay, when bank is issuing a duplicate draft, bank will ask the customer about what? Bank will ask the customer about signing the indemnity bond. So indemnity bond simply defines that if anything in the future or any loss in the future happens to the bank due to this demand draft, duplicate demand draft or a duplicate fixed deposit receipt, in that case bank is not liable to bear that loss. the customer will be bearing that loss and paying to the bank. So you can see a contract by which one party promises to save the other from the loss caused to him by the conduct of promiser himself or the conduct of any other person is contract of indemnity. So section 124 of Indian Contract Act in banking is, it have been said, like such relationship occurs in a transaction of issue of duplicate demand draft or a duplicate fixed deposit receipt. So in these cases, the person availing the facility will compensate the other or any loss which arising from the wrong access payments. Okay. So these are the total 7 banker customer relationship we have seen. And under this particular slide, you will find all the banker customer relationship is defined. Like if the bank deposit in the bank will be done, bank is a debtor, customer is a creditor. If a customer is taking a loan from a bank, bank is a creditor, customer is a debtor. If a customer is providing safe custody to the bank, bank is a belly and customer is a beller. If customer is taking a locker facility, bank is a lessor and customer is a lessee. If a bank is performing a collection of check, okay, and if bank selling or purchasing the securities on behalf of customer, or if bank performing the shares given for sale by bank is giving certain document on a sale, if any standing instructions given to the bank, in all of these cases bank is agent and customer is principal. Okay, bank will be the agent and customer will be the principal in any kind of transaction when the bank got order from a customer to perform something. Okay, now if a purchase of a draft is there, so in the purchase of a draft, what happened? The customer gives the money to the bank and asks the bank